So let's get into it. I'll give you a quick overview of the market. A lot of the people on the emoji team have already heard this, so apologies, but I will repeat myself. Um, for those who are wondering why the market has been performing so poorly over the last week, it's because of a few things. One, U.S. economy. So the U.S. economy has been performing very poorly and had a very bad jobs report. Unemployment is up higher than expected, and the federal interest rate for the U.S. dollar is still high, and they haven't reduced it yet. And the U.S. is officially in a recession. And so recession, again, it's defined when your unemployment is at least 0.5% higher than the low of the previous year, which is true, in the U.S. And unfortunately, the U.S. is, interconnected to nearly every major economy on the planet. And when a lot of financial institutions see that you're in recession, they pull out their money, right? They pull out their money out of their riskiest assets first. And typically they'll retreat to U.S. Treasury bonds, right? Because you can make a 5.5% yield, still considered relatively safe, even though I would argue that it probably is not safe or it's getting less safe. And this initially caused about a $2.9 trillion wipeout from the stock market. So that's how we ended last week, was $2.9 trillion completely wiped out from the market. Tech stocks did really bad as well because all of this hype around AI, as you all know, at the beginning of the year, it was pretty much meme coins and AI. Those were the two themes. But what people don't understand is AI doesn't just make money by nature of being AI. And so the underperformance of those stocks in their quarterly reports was also a contributing factor to just poor economic performance overall. And then what happened is that these fears, these issues bled into the Asian markets in Taiwan and also in Tokyo and Japan, because obviously they're a day ahead of the US. So Sunday and Monday saw further stock market declines, raising that wipeout amount from 2.9 trillion to around $6.4 trillion. So effectively there were miniature stock market crashes in Japan and in Taiwan. I think around 10 to 12% declines in both of those markets. And this leads to the third factor, which is the interest rate, so the cost of borrowing money in Japan for the yen is like pretty much zero. It's 0.25% right now. But in the United States, it's 5.5%. So what a lot of people were doing, a lot of institutions were doing for the last 10, 20 years is that they would borrow money in yen and then they would use that money to purchase USD, yield-bearing assets like U.S. Treasuries or stocks or things like that, right? Because, it's more capital efficient. You make more money. You borrow money for free, basically. And basically $2.2 trillion worth of institutions and people have been doing this. And it's called a carry trade. And so because recently the yen has undergone a lot of inflation, people in Japan have been hurting. They can't buy things. It's just a bad economic situation in Japan generally. Um, you know, Basically they had to increase their interest rate to what is now 0.25%. So they doubled it. But in doing so, they affected this entire $2.2 trillion carry trade market. And that's starting to unwind. So it's basically starting to collapse, and it's causing systemic issues across financial institutions and just investors generally. And because they now have to pay more money on the loans that they took, right? And so where are they going to take that money? They're going to take it from their riskiest assets. Crypto is the risky asset that they take their money from. So anytime something happens in the traditional financial market that's bad, the first place people take their money from is their most risky asset. And crypto is always going to be at the top of that list. And so recessionary fears have a direct correlation to crypto not doing well. Anytime you see that, you should think about, okay, I might want to take out, my Bitcoin or ETH and put it into USDC just for a little bit and then put it back in at a lower price, right? So you can get more of it, or stacking sats, right? That's what they say. And so this is effectively what's happened over the past, week or so. The market has been doing better over the last 2 days. So basically, things are starting to even out. I've been looking at the volatility, or what's called the BBWP, the Bollinger Width, and it's starting to even out. It's still market's still pretty damn volatile, so I wouldn't be doing, like, anybody who trades options or futures. I would not do that. Even on Umoja, like, I wouldn't do it right now. It's just you don't know which way it's going to go. It's too volatile, and that's also true for ETH as well. Um, but it does look like it's starting to stabilize around $57,000 per Bitcoin, and also around $2,400, $2,500 for ETH. Now, here comes kind of the scary, not scary, but not necessarily hopeful news, is that there are some future market considerations that could make it go down a lot more. So the first is that the last time Bitcoin was in a recession, or in a recessionary environment, it was at around $47,000. I think this was either 2020, around the beginning of COVID, either 2020 or 2022. And it went from $47,000 to $16,000. So it declined greatly. And not to say that that's going to happen in this scenario, but it is a reference point that is good to keep in mind, right? Now, the second factor is that there's this term called like market supply shock, or market shock supply. And all market shock supply means is that, are there whales out there that might sell a significant amount of cryptocurrency at once, like hundreds of millions, if not billions of dollars? And this has also been happening. So I believe Jump Crypto, a hedge fund in the crypto space, they sold $314 million worth of staked ETH, over the past weekend, which caused fears that they were having issues. Some people think that they were doing the whole carry trade thing with the yen. Other people think that they're under a CFTC investigation because they manipulate the market a lot. Could be both. Who knows? Um, uh, the other issue is that the Genesis creditors, the people who got paid out from Genesis collapsing, and also the Mt. Gox creditors, so the people who got paid out Bitcoin from Mt. Gox collapsing, and the people who were owed money for that whole debacle, they both hold about $10 billion worth of cryptocurrency. And no one knows if they're going to sell or not, right? If they decided to mass sell, then Bitcoin would go down. All of crypto would go down substantially. It would be a real crash. And the U.S. government holds about $10 billion in crypto as well. Now, the U.S. government, I don't think, is going to sell, but the total supply shock amount is, around $10 to $20 billion. So that's just it's important to keep in mind that with whatever is happening that's making the market not do well or do well, there's always this amount of cryptocurrency that could partially be sold to make things worse, or they can hold it and make things better, right? So that's really important to note. And then the last thing that I would say is that there has been a trend that's a little bit concerning in crypto with regards to high frequency trading firms. So if you don't know what a high frequency trading firm is, it is a fund that they create software that trades, assets or stocks or crypto very, very, very fast. Basically, they create money printers, right? And these softwares, they only exist to create money. That's literally what they exist to do. Now, what they've been doing is that they've been forcibly shorting the market, and selling massive amounts of cryptos on purpose to make the prices go down. So basically, they've been manipulating the market, and Jump Crypto is one of them. Jane Street has also done this. It's something that in traditional finance is illegal. So, like, if you were Goldman Sachs or BlackRock and you were doing this in the traditional market, you mean probably wouldn't go to jail because you just pay off the government, but you definitely would get fined. It is illegal to do, but it's not necessarily illegal to do in crypto. And so, even like some of the market signals that we see when things go down and things go up, it could be manipulated. In fact, there are terms, in the trading community, like, this is a fake signal, which is just wild. And so that's something that I've started to notice is happening a lot. In fact, some of these funds target protocols and target networks where they see that those networks have established like long positions on their own, native tokens. I forget which one like lost a substantial amount of money doing this, but they can literally bankrupt core development teams doing this, and they have been. So that's just something to be aware of. But overall, like in summary, I guess, in terms of the market overview is, and this is what I've personally done with my money. What I've personally done is I divested about half of my Bitcoin. So I took my Bitcoin out, half of it, and put it into USDC. That doesn't mean that I'm bearish against Bitcoin. It just means that I think I could get Bitcoin at a better price. Because I do think that it'll go down at least a little bit. And that's what I'm planning to do. I divested a good bit of my ETH, almost all of it for the same reason. And I'm pretty bullish on both Bitcoin and ETH. So I'm doing this strategically, right? I'm not doing this because I want to. I did try to, put a long position on Moja, which is the protocol that I'm the founder of that allows you to, do automated trading and also and very soon gain access to assets that just generate yield and protect you from risk automatically. And I made a little bit of money on that, but then I closed it out because things are just too volatile. So, next week, hopefully when things aren't volatile, I'll tell you trades that I'm making. But right now, that's pretty much it. I divested half my Bitcoin to see if Bitcoin is going to go down to buy more. And I divested most of my ETH for the same reason. But I don't see in the long term when it comes to, where Bitcoin and ETH's price is going to be, in December. I don't see Bitcoin being $100,000. I don't think that's not going to happen. Even if Trump gets elected, I don't think it's going to happen. I think it's probably going to be probably 75, at most 80, $85,000 per Bitcoin, and that's in a good scenario. And there's a lot of things that need to happen for it to get toward that upper range. And then ETH probably 4,000, but not much. I think ETH's time is probably next year because ETH hasn't seen a lot of ETF inflows. It's only been low 100 millions, whereas Bitcoin, its total net inflows over the year have been 17 billion. So a lot of funds are just focused on Bitcoin. Now the things that could happen are the things that will influence whether we get to a true bull market, which I feel like this whole year everybody's been waiting for a true bull market to happen rather than maybe 2 weeks of it is. And I'm just going to give you the best case scenario and the worst case scenario. These aren't my politics. These are just things happening in the market. So just take it for what it is, right? The first, Trump getting elected obviously would be good for crypto. Maybe not great for the world, but certainly good for crypto. The second, the Fed, so the Federal Reserve of the United States and the Bank of Japan, which is the Central Bank of Japan, they both have meetings literally during Token 2049 from the 18th to the 21st of September. Based off of how the market reacts to their decisions is going to determine whether the world is in a recession or not, a bad recession. So basically, both the U.S. Fed, they need to reduce rates. They must reduce rates. If they don't reduce rates, then the market's going to react very badly. If they reduce rates too much, the market will also react very badly. So they need to reduce rates reasonably, like 0.25%, at most 0.5%. That's what the market expects. The Bank of Japan, they're in a really tough situation. They need to lower their interest rate back to what it was before. Now, what's messed up about this is that they have an impossible decision to make. Either they, continue to increase their interest rate so that, they can save their people so that the yen stops inflating and people can afford groceries and just the cost of living, right? So they either do something that financially helps Japanese people that they serve, or they reduce the rate, enable all those $2.2 trillion of carry trading to continue happening that the world is depending on right now, and basically save the global economy from a worsening recession.